All right. I went over a quick version of the flow of costs as they go through the three inventory accounts that you have with a manufacturer. You have one called raw materials. You have an inventory account called work in process. Okay, which is also WIP, work in process. And finished goods. So FG for finished goods. Okay, so each one of these we're going to give a T account to stand in place of the general ledger. Now, raw materials actually has three subset accounts underneath. It's considered one inventory, but it has three subsets. Okay, so the first subset is materials. The second subset is called labor clearing. The third subset is called overhead. Also OH for overhead. Okay, that can also be called factory overhead, manufacturing overhead, factory burden, all names that refer to overhead. Okay, in this class, I typically just say overhead, but all of those names are part of it. Also, as far as labor clearing account, there are some companies that still use labor clearing account. Other companies just skip it. A clearing account is when something is going to come in as say a debit, and then is immediately going to be credited out, cleared out. So as it comes in, it's going to go straight out again and be assigned to other accounts. It's just a way of organizing and bringing it together. Now, in these days with computers where it isn't as necessary to have a clearing account, many companies do not have it. So they just take the direct labor into work in process and the indirect labor straight into overhead and don't have a clearing account. Okay, but many companies still do, and so I am showing you the clearing account. I also feel like it's easier for you to understand what's happening with the labor if you see it running through the clearing account. All right. Work in process and finished goods each have their own ledger account. And we will need a cost of goods sold T account. Now, materials is going to include all the materials that we have. And so if you have just the lump sums in this materials T account, you don't know specifically how much of material A or how much of material B. So in your project where you're going to work on building dog houses, okay, there's lumber of various kinds, there's shingles, etc. How much lumber do you have? How many 2x4s do you have versus how many 1x4s versus how many shingles do you have? You're not going to be able to just look in the materials account. That's just the total dollars of all the materials. So we have to keep a separate ledger for each one. So we have the 1x4s and the 2x4s, etc., the shingles, etc. Okay? So we have a separate subsidiary ledger for all the various materials. Now, if I add up the costs in all of those subsidiary ledgers, they should equal the balance that's in the general ledger in the materials account. Just like we did back in Accounting 101, we had a subsidiary ledger for accounts receivable. We had a separate little ledger for each customer. All the customer balances had to equal the total of the accounts receivable balance. This is the same kind of thing, okay? Now, we're also going to have, for work in process, we're going to have a subsidiary ledger. Each job will have its own subsidiary ledger. Now, we have a special name for the work in process subsidiary ledgers. They're called job cost sheets. Also known as job cost cards. Okay? And so these keep track of each separate job. How much materials, how much labor, how much overhead do we have on any particular job? If I add all of the incompleted jobs balances together, they should equal the work in process. Okay? Finished goods will also have a subsidiary product A, product B. Okay? Now, in your project, we are only working with the materials and the subsidiary ledger that goes with materials. But just realize, for some other things, that these other subsidiary ledgers go along with it. Now, there were some Cengage problems, I believe, where you had to fill out a job cost sheet. Okay? Now, I have the job cost sheet represented as T accounts here. So that just the total of what's coming in, and when it's completed, it goes out. But in a real job cost sheet, you have job number 1 and various information across the top. Then you have the direct materials, and they're listed out. Every direct material that went into that job. Then you have the direct labor, and that's all listed out. Usually both the hours, the number of hours of direct labor, and the cost of direct labor is listed out. And then is the overhead that's applied. Overhead. And that's usually done once a month. At the end of the month, we calculate out the overhead based on whatever their overhead rate is based on. So, if it's on direct labor cost, and then you had, like, I don't know, it was 65% or whatever of the direct labor cost, and you would take that times the 65% once a month, and that would be your overhead that's applied. Okay? So, when this job is done, okay, the people that are working on the job and the foreman out on the factory is going to say, okay, this job is complete. At that point in time, you have a summary. And the summary is going to total all the direct materials, the direct labor, and the applied overhead. And that way we know the total cost for that particular job. Okay? Then that summary can be used for taking the cost out of work in process and putting it into finished goods. But then we're going to get that number from this job cost sheet, from calculating up the total. If it's not a complete job yet, we do not fill out the summary sheet, the summary part yet. Okay? The summary part is not filled out until the job is done. Okay, so let's talk about going through these are all other than cost of goods sold. That's the only account that's not an inventory account. This is an expense account. Okay? All these other ones are inventory accounts. The inventory accounts all work the same way. You have a beginning balance plus whatever comes in, okay, minus whatever the cost that went out, okay, will give you the ending cost that's in that inventory account, okay? The other thing we can do is take the beginning plus what came in minus the ending, if we have that, and that would equal what went out, okay? So either way, if we have 3 out of the 4 of those numbers, we can calculate out the 4th number. So all of those inventory accounts, they are all an asset. The company owns those inventory things, costs, okay? And so they all work the same way. Okay, now, in this materials account, I would have a beginning balance in here, then whatever came in to the materials storeroom, that means we're purchasing it. I'm purchasing new lumber. I'm purchasing new shingles. That's going to come into the materials storeroom, okay? Okay. And what goes out of the material storeroom happens when someone from the factory floor sends us a requisition form. Okay. They're going to send us a requisition form that says, we're ready to start on job number 2. This is how many 1x4s we need. This is how many 2x4s we need. This is how many shingles we need, etc. Is all going to be listed on that requisition form. On your project, I give you requisition forms. Okay? And so the storeroom manager is going to be in charge of making sure all of those items are gathered together, put on a forklift if necessary, whatever we need to do, and we get those materials that are on the requisition and take them to the factory floor. Okay. Just remember, this is the materials storeroom. This is the factory or the factory floor, okay? The actual space where jobs are being worked on, okay? This is the distribution warehouse. All right. All right, so material storeroom is where we store, and this might be an entire building. It might be more than one building. If you're General Motors, you don't have one room with the materials in it. You don't even have one building with the materials in it. The materials are coming from all over the planet in various buildings, but it doesn't matter. We're going to call it the material storeroom. For your project, it's one storeroom area. All the materials are in there, and there's a manager in charge of those materials, okay? When the manager gets the requisition from the factory floor, they have to load up all of the stuff that's on the requisition, and we're going to issue those materials, okay? Now, all of the materials, regardless of whether they are direct materials or indirect materials, all of the materials are going to be put on the forklift or whatever and transferred to the factory floor. Physically, all the materials are going to the factory floor. However, accounting-wise, we are going to just transfer the direct materials to the work in process account. And the indirect materials, we're going to transfer to the overhead account. So you have to remember from last week's lecture, what is the difference between the direct materials and the indirect materials. The direct materials are those which can be traced specifically to a particular job. So the 1x4s and the 2x4s, I can trace those directly to job number 1 or job number 2. Whereas nails, things like nails and glue and little bits and pieces, where a box of nails might be on the requisition form. So we put a box of nails on with all this other stuff to go to the factory floor. But the box of nails, some of it might get used in job 1, some of that box of nails might be used in job 2, some might be used in job 3. I cannot trace exactly which nails got put in job 1. Also, things which tend to be a real low cost, like nails, would be a very low cost item. So those kinds of things that are low cost and or untraceable become indirect materials, and we run those through overhead. Eventually, they're going to get in work in process too, but they just go a roundabout way to get there. Okay? So we're going to divide out the cost of the stuff that we put on the forklift for accounting purposes into the cost of all the direct materials and the cost of the indirect materials. And we will make a debit to work in process and another debit to overhead, and then we will credit materials for the total cost of all those materials that we put on the forklift and issued out of the materials storeroom. Okay? Now, to get the ending, of course, I'm going to get my debit footing, which would be the beginning plus the purchases, and my credit footing, which is the stuff that we issued. Then I would put another line, big number minus the small number, underneath the big number. Since these are all assets, inventory accounts are assets, that means I'm going to have a debit balance. You cannot have negative inventory, and therefore we will never have a credit balance in any one of these accounts except for the possibility of overhead, because this is not an actual thing. Okay, and so my ending balance will be here. I can take my beginning plus my purchases minus my what I issued, and that would equal what my ending balance is. Now, if I take also on these subsidiary ledgers, okay, I have the beginning balance of 1/4s plus what I purchased of 1/4s minus what I issued of 1/4s equals my ending balance of 1/4s. Same thing, 2/4s. I have my beginning balance of 2/4s plus whatever 2/4s I purchased minus whatever 2/4s I issued out equals my ending balance of 2/4s. Shingles. I have a beginning balance of shingles plus whatever I purchased of shingles minus whatever I issued of shingles equals my ending balance of shingles. Now, if I add up my ending balance of 1/4s, my ending balance of 2/4s, and my ending balance of shingles, they better equal this ending balance of the materials account that's in the general ledger. If it doesn't, that means you did something wrong posting-wise, most likely, okay? When I purchase some shingles, I have to put it in two places. I have to debit materials and I have to debit the shingles account separately, okay? If I issue some 1/4s, I have to credit the materials account and I also have to credit the 1/4s. Whenever I debit the general ledger account, I also have to debit something on the subsidiary ledger. Whenever I have to credit something on the subsidiary ledger, I better also be crediting the same amount on the materials account in the general ledger, so that the ending balance of all of these will equal the ending balance of those as long as you do that. Okay? Questions about the materials account and or the materials subsidiary ledger? Okay. Now the labor clearing account, here again, this is just being used as a stand-in to clear stuff out. So this is what's going to go in. We're going to start with a 0. What goes in is the gross wages. Okay, that will be debited to the labor clearing account, is the gross wages of factory. Gross wages of the factory. So if somebody works in the factory building, the foreman, the guys that clean the floors, the people that maintain the machinery, the actual people that are working on building the jobs, all those people work in the factory. And so the wages of those people will be debited to the labor clearing account. If it's somebody that works in the office building, this does not go here, okay? A salespeople, administrative people, executives, okay? They all work in the office building, okay? And so, or out in retail store outlets, whatever, those people's gross wages do not go in this labor clearing, only the factory people, okay? Now, once I've put those gross wages, I've debited labor clearing, I'm going to immediately turn around and credit them right back out again. But here's where I'm going to separate them. Just like when I issued materials, I had to separate it at that time. For accounting purposes, I'm going to do the same thing here. I'm going to take all of these gross wages that belong to the people who are actually working on building the jobs. Just those gross wages are called direct labor okay? And for accounting purposes, I'm going to put them into work in process, and the indirect labor, which is all the gross wages of anybody who's not directly working on building a job. So the foreman, who's like a supervisor, the maintenance people, the equipment maintenance people, all of those people, okay? They are all, their wages are called indirect labor. We need those. We need those people. It's not like they're unimportant, okay? We need those for the jobs, but they're not working directly on a job. I can't trace the equipment repairman's guy to job 1, job 2, or job 3. He's helping all the jobs, okay? So that's why it is indirect labor. And so accounting purposes wise, we will put that into overhead. So we're going to debit labor clearing whenever we have gross wages of factory, okay? And you would debit labor clearing. You're going to credit payroll tax payable for the various payroll tax payable accounts, such as Social Security payable, Medicare payable, income tax payable, blah, 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 all the stuff that we're taking out of their checks, okay? And we learned this back in 101, okay? And we would credit cash for the net pay, okay? This is exactly what we learned in Accounting 101. Only instead of, in Accounting 101, we said, oh, we would debit wages expense instead of labor clearing. And we're still going to debit wages expense if it's somebody that works in the office, okay? But if it's somebody that works in the factory, we're going to debit labor clearing instead, okay? So that's where that debit comes from. All right? Now, once I get this done, this is the gross wages of all the factories. I've just divided them out into two things, direct labor, indirect labor. So now my debits of total is the same as my credit total, okay? And so we have a balance of 0 when we get done. We start with 0, we end with 0. That's a clearing account, means you're going to clear it out right away. Okay? Now, let's go on down to the overhead. Okay? Remember that on the left side, on the debit side, is our actual costs, our actual overhead costs. So our actual indirect materials, our actual indirect labor that we pay, and we have various other actual overhead costs, such as if we pay rent for the factory building, utilities, equipment, repair, insurance and tax, property taxes, okay? This is all stuff for the factory building, okay? Depreciation, let me squeeze that in here, okay? Anything to do with the factory building. If I'm insuring the factory building, I have electricity for the factory building, I'm repairing stuff on or in the building, okay? Real estate taxes, personal property taxes for stuff that's in or on the building, okay? Depreciation of the equipment that's in the factory building, okay? Once again, just like this labor clearing account, we learned before in Accounting 101 that if you had utilities, which is your electricity expense, you would debit electricity expense or utilities expense and credit cash if you were actually paying out the check, okay? Whereas here, we're going to debit overhead and credit cash, okay? If I have utilities for the factory building, I'm going to debit overhead. Okay? So if I have rent for the factory building, I'm going to debit overhead. If I have insurance that I pay on the factory building, I'm going to debit overhead. If I have depreciation at the end of the year I calculate, I'm going to debit overhead. I'm not debiting all those separate accounts. Now, if I have rent for the office building, I will debit rent expense, just like we did in Accounting 101. But for the factory building, I'm going to be debiting overhead for all of that stuff. Okay? So now, all these actual overhead, factory building related things are on the debit side of my overhead account. Now, it so happens that some of these things, especially things like insurance and taxes, they might only come one time a year. Equipment repair might be extensive, a huge number, but maybe it only comes a couple times a year, okay? Now, if I took just what happened in the month of June and said, okay, all the stuff that happened in June, I'm going to apply to the jobs that were done in June. Well, let's say the insurance and taxes happens in November, okay? So if in November I have very similar jobs, now all of a sudden I have a huge amount of stuff for November that I'm going to apply to jobs that are basically the same, okay, as the jobs I did in June. It didn't include all that big stuff. So one of the points is to find out how much does each job equal? How much does each job cost us to build? Because I'm going to use that number as a starting point to figure out how much should I charge the customer. I just built a doghouse. How much do I charge for it? Obviously, we all understand that we want to make more than whatever it cost us. Okay? So, but what did it cost us? Okay? So this is our system to figure out how much it costs us. And we're going to have this job cost sheet on that one job. We'll know at the end of it exactly how much it cost us as far as materials and labor. But the overhead part is a little more difficult because of the fact that these things come in at different times of the year. So we need to apply overhead based on a rate. And you had a Cengage homework assignment where you had to work on that, okay? And the rate is going to be different depending on different companies, okay? So the formula, if we're going to just have one rate, okay, the formula is the total estimated costs divided by the total estimated driver. Okay? So we need to know, well, what costs are we talking about? How did we get those costs? And what about the driver? Okay? So let's start with the cost. This is the total estimated overhead costs. So, in other words, I'm going to estimate all these actual costs that we just talked about. So maybe in October of 2019, I'm gonna estimate all the costs, overhead costs I think I'm gonna have for the year 2020. Okay? And when I come up with that number, that's gonna be my numerator for my formula, for my rate formula. Okay? Now, this is not that easy. How much indirect materials are we gonna need in 2020? Well, that will depend on how many jobs are we going to be doing in 2020. How much indirect labor? Well, that